Want to buy a home but don't want to deal with higher interest rates? Look, I get it. Despite a lot of noise about the Federal Reserve lowering interest rates recently, the fact still remains that rates are currently much higher than they were just a few years ago when receiving that 4 or even 3% rate was possible. However, there is a way to still get that 4% rate even today. Assumable mortgages. Assuming someone else's mortgage at a lower rate can save you thousands over the course of that loan. But the process can be a little tricky. That's why today I'm going to share how you can assume someone else's mortgage in 3 steps. Tip number 1, have your agent find you a list of potential mortgages. Your agent should have access to tax records and mortgage information that will allow them to find out which homeowners in the area purchased their house when rates were lower. They can create a list of mortgages in the area that you would want to assume. From there, you'll need to confirm that a seller's mortgage is actually assumable before going forward. For example, most VA loans are assumable, but many conventional loans are not. You will also need to qualify for whatever loan you want to assume, so make sure you work closely with your agent to ensure you have a list of quality homes that actually can be assumed. Tip number 2, negotiate a deal that works for everyone. If a seller lets you assume their mortgage, you can probably bet that they're going to want something in return. Now, as long as you're working with a good agent, this can work out for everyone and you can make it a win-win for all parties. For example, your seller might ask for a higher price, but you're still getting that lower 2 or 3 or 4% interest rate. This will end up saving you a ton of money in the long run. So the upfront cost is usually always almost worth it. Now, have your agent do all the calculations on the purchase price versus the interest rate to make sure that you are getting the very best deal possible. Tip number 3, be patient. Look, I know it can be exciting to find an assumable mortgage with a lower rate, but you're still gonna need to be patient. It can take 2 to even 6 months to get the lender to approve the mortgage to be assumed by you. You're also going to have to qualify before moving forward as well. For example, if you want to assume a VA loan, you don't technically have to be a qualifying veteran. However, a lot of VA homeowners are not going to allow you to assume that mortgage because it's going to tie up their entitlement that they're going to have. Now, that doesn't mean that it can't happen, but there's going to be certain things that will need to happen in order for a VA homeowner to allow you to assume their mortgage. This is just one of the many things that can happen when you're trying to assume someone's mortgage. So definitely talk with your agent to go over all the possibilities of what could happen with assuming someone's mortgage. While finding an assumable mortgage to lower your interest rate can be tricky, it can end up saving you tons of money in the long run. If you are interested in this option or you want to talk more about what it would take to assume someone's mortgage, just give me a call or shoot me an email. I can put together a list of potential assumable mortgages in your area, and then we can go to work and try to get you into that property. I look forward to hearing from you.